Hello everyone, welcome to my YouTube channel once again. Since yesterday I want to update some of those charts that I shared with you yesterday. Welcome to my YouTube channel. My name is André Cardoso. Thank you very much for being here and for following my work. It's a pleasure to share my views with those who are learning process and trying to create a strategy to trade the markets and trying to understand how the market behaves. So I found useful those harmonic or advanced pattern formations, and I started to study and to learn how they behave. And well, I'm here today just to share some of my thoughts with you and updating some of the chart that I shared with you yesterday on my previous video. So if you didn't check that video yet, you can always do that in order to get synced with some of those advanced patterns and to try to understand how can we project them and how can we react as soon as they complete. So let's start with the Norwegian krone. I shared I shared the potential formation of that pattern that the market is now forming, or it has formed already, after the breakout of this structure. So as soon as the market violates above these previous structure highs, above 932.31, the market has retested that structure there, so that the market has violated above these highs. It has printed a new small pressure zone, small resistance there, and then a retest of the previous structure lows, the previous structure highs, and then the formation of the pattern above. So one assault to the weekly fractal positioned above from 25 September. So basically the market is now threatening that price zone, but now, as we can see, with that major bearish pattern and actually the shark pattern that I shared with you, the minor or the internal one. So basically we search for an extension to the golden Fibonacci level, and the market is now reacting well from that price zone. So basically we expect a retracement, let's say with a minimum to the 38% Fibonacci retracement level for the Norwegian krone. Let's see if that will happen. That may print this bullish 5-0 sequence at the 50% Fibonacci retracement level, so just a few points below the 38, obviously. So this will complete the 5-0 sequence at the 50% Fibonacci retracement level. We will not be surprised if the price starts to move sideways for a small period of time and then eventually a bounce from this price zone will not be a surprise. So let's stay focused on this price zone, but without ignoring obviously that this daily actually a daily fractal resistance positioned at 941.10. So this is previous structure daily fractal resistance, which may act as a pressure element and as an element of support. Let's move forward. Euro versus dollar, it has failed the 88% Fibonacci retracement there, so the market has synced below that daily fractal support that I showed you yesterday, and it has found pressure at the 113% Fib. So basically the market has extended to the 113% Fibonacci extension from all these swing highs. So basically we are facing alternate bat pattern at 113% Fibonacci extension level, which is also converging with the 78% Fibonacci retracement level. So basically the market is rejecting that price zone, and we will not be surprised with a bounce from these levels towards the default targets at 38% Fibonacci retracement level, 117.38. Eventually a second target if the market decides to approach that 200 moving average between the 50% Fibonacci retracement and the golden Fibonacci level. 200 moving average 2 hours time frame chart. Let's see if the market will search for that 200 moving average. Australian dollar, I shared with you, I was expecting the formation of this bearish shark pattern above. The market has entered into this sideways moving process, and I draw this trend line support yesterday, and the market has sinked below that trend line, and obviously now threatening the daily fractal support. At this point we can see this as a potential, let me show you, a potential technical double bottom, actually not on a 1 hour time frame chart, but on a 2 hours time frame chart we can see a clear retest, not so clear, but there's a retest with the second bottom retesting the close prices of the first one, so creating kind of a minor double bottom there, and the market has already confirmed that pattern with the violation of the previous structure resistance, the close price right there, and obviously the higher highs of the next zone a few points above. So the market is already trading above, which may confirm more upside momentum. One of the things that I can see here, and taking just a fast approach, let me change this color, the potential head and shoulder in one inverted heads and shoulders, which will require the Australian dollar to find some pressure above, and then eventually the formation of the right shoulder, eventual inverted heads and shoulders, which may put the price trading something close to 200% Fibonacci extension. Well, let's see. 171.28. If that ends up being the case, if the market forms that inverted heads and shoulders, we may see more upside momentum for the Australian dollar, with one eventual objective to retest or break above, but a retest of this trend line resistance, and the market may find some pressure if the price achieves those levels. Let's see if that will happen. More, the New Zealand, nice reaction from the 50% Fibonacci retracement level, just a few points below. Actually, we need to adjust this because the market, we can expect that kind of reaction from the 50% Fibonacci retracement, because as I said before, this is also the bullish 5-0 sequence. Okay, so this is the bullish 5-0 sequence, which implies, or which may suggest, a bounce from the 50% Fibonacci retracement level. So, and basically the market actually has found some pressure at the golden Fibonacci, a few points below the golden Fibonacci retracement level. So nice bounce for now. Let's see if we have a retest of these previous structure highs, the previous, actually I need to adjust those fractals here, the previous and most recent support below the daily resistance. It's already adjusted to this previous structure high. So let's see if we have at this point a retest of that fractal above. We can also try to put a Fibonacci retracement here and try to see if we are approaching some critical level. Golden Fibonacci retracement 66.75, so we are actually approaching that Fibonacci level. Let's see what will happen from there. A retest of the daily fractal, and well, let's see let's see how the market will, if and how the market will retest that daily fractal, because we may see this as a potential kind of a minor cup and handle. But as I said yesterday, on a higher time frame, a violation below this trend line, and obviously with that bounce today from the 200 moving average, it will be more difficult for that to happen, or at least it will take more time for that to happen, because I was expecting one approach to this trend line this week. It didn't happen. The market has started to bounce from this area, but as I said yesterday, a violation of this structured trend line or this ascending trend line support, and eventually a violation of this daily fractal and the weekly fractal below, that may put the price trading the 38% Fibonacci retracement level, and also this left head and right shoulder with a projection at the 38 or a few points below the 38% fib. So if that happens, pay attention to that potential bearish momentum for the Kiwi. For now, what we are seeing is just one approach to the golden Fibonacci levels, and let's see how the market will behave from there. If the market finds a decent resistance and decent pressure there at the golden fib, we can start to project patterns below, and I will search for the potential 127 extension. Let's start with that level, 127. This is the bullish Gartley pattern, golden fib as support, and then if the market finds resistance here and it starts to fall, as soon as the market violates these previous structural lows or the fractal support, if you want, we want to project this eventual Gartley pattern there. And as always, we will not expect that pattern to turn into a monster trade. We follow the rules. We push our retracement tool, we draw a retracement into the default targets, and we search for those default targets, 38, 50, and 61.8. So this is the trade for that Gartley. So don't expect this to react and to put your and to put the price trading above the weekly fractal and the monster trade. It can happen. We never know what will happen from there. If the market really decides to reject a breakout of this structure, it may form new highs later. But for now, let's wait for a potential pressure zone at the golden fib. If that happens, and if the market decides to fall, we wait for a breakout of this fractal support, and we have the Gartley pattern there waiting. Of course, it's too soon to predict. Nonsense, completely speculation. I'm just sharing with you the potential ratios and how those patterns will form. So basically, between the golden Fibonacci retracement levels, there's only one pattern that can be formed, the Gartley at 127 from this very last swing low, the very last retracement, a new bounce, and then the 127% Fibonacci from the first swing projected below. That will form the Gartley pattern. At this point, the market is rejecting the golden Fibonacci level, which may put the price, if the price decides to trade below that fractal, it may put the price trading very close to those levels, but we will search for the 88% Fibonacci retracement and not the 127. So basically, we will search for one potential bat pattern below. Okay, if the market decides to reject this price zone without touching the golden fib, and then it starts to fall, a retest of that trend line, it will be the same objective as the Gartley, a retest of that major trend line support approaching from below, or the eventual violation of that fractal of that trend line. We never know what will happen, but we will see. But the objective may be the same, so a retest of that structure, but with different variables and criteria in terms of Fibonacci, which will guide us into a different advanced pattern formation, in this case between the Gartley and the bat pattern a few points above it. So let's see. As I said before, we will not be surprised with a retest of that daily fractal, which may form kind of a cup and handle, which will imply a new retracement eventually to the 38% Fibonacci retracement level. We can see this as a potential the cup, or actually the handle, being formed and being pushed below just to form the handle, and then the confirmation of the pattern above the daily fractal. But as I said, we need to wait patiently, don't rush, because as you can see, the market is already trying to find some pressure there. We never know what will happen there. We need a specific pattern in order to, well, to create a strategy that we can repeat over and over and over again. So this is kind of a random, what will happen now? It will trade higher, so I will jump in those trades, and without a specific technical reason to do that. And unless you are a fundamental trader, or you want to develop a strategy to trade based on the fundamental approach or sentiment, social sentiment approach, that can trigger different perspectives inside the market. But as a technical trader, it makes no sense to start to push trades just because I think the market will trade higher or lower without a specific pattern being formed at that time. So basically wait patiently, and if the market forms the event for you, we can create a risk strategy, and we can identify our limits and our targets for that specific pattern, and that allows us to survive inside the market. So the Kiwi, for now, not very interesting, but at least useful as educational content in terms of ratios and what we should search for, or at least what I search for on those advanced patterns. So Australian dollar versus the New Zealand, I was searching for, as I said yesterday, I was searching for initial pressure, the golden Fibonacci extension level forming the bullish shark pattern, and as we can see, very limited pressure there, and then the market is starting to approach, or at least approaching this 200 to 24% Fibonacci extension, which may form, will form the bullish crab pattern extended at that Fibonacci level. That pattern implies or suggests, as always, a retracement, a bounce from this price zone, and with our default targets as at 38% Fibonacci retracement. Actually, the default target, as I said yesterday, for the shark pattern, always a 50% Fibonacci retracement. But we have a nice run. If the market decides to bounce, we have a nice run, and a nice run from the bottom. A retest of the weekly fractal broken support will not be a surprise, and converging with that 38% Fib, I believe it makes sense to target initially the 38% Fibonacci retracement level, and then we can manage our position if the market decides to move towards the default expectations. This is Australian dollar versus the New Zealand CHF. Also, a nice violation of this descending channel. So I draw this as a parallel structure. The market has felt some pressure, but a nice violation of the channel, and then a retest of this trend line resistance turned into a support, and then nice trigger for more upside momentum. So we are now threatening the daily fractal. The daily fractal was formed. Actually, it was just this formed at this high, so at 91.72. So the market has already printed a new fractal resistance right above that daily fractal, and it has recovered the daily fractal a few moments after. So what we have here is a small technical double top. A violation of the fractal support may put the price trading, obviously, the 200% Fibonacci extension level. A few points below, basically 191.21. Previous structure highs, and the default target for that double bottom. We have a double bottom there, and the default target for that double bottom projected before at 91.22. So we have now a potential technical double top and the eventual retracement or pullback to 91.22. The default target for that technical double top, and as we can see, that implies also a 38% Fibonacci retracement to be reached. So at this point, what you can see, I can see this kind of a round bottom with one first low there. Actually, to identify that, you need to see the price entering oversold and then oversold again. So we have nice bullish divergence between those lows. For those who search for those market conditions using RSI or stochastic or MACD, you should search for those market conditions between those lows. We have nice bullish divergence there. So basically, I will not be surprised to see this acting as a measure, or let's call it a higher degree, inverted edge and shoulders. If this happens, if the market decides actually to sink into those 38-50% Fibonacci retracement level, I will not be surprised to see this acting as inverted edge and shoulders, which will trigger only above these previous structure highs. I need to see a clear, let's say, a close above these prices, above this resistance, may trigger more upside momentum for the pair. CHF, even if that happens, it's still possible to form that cipher pattern at 78% Fibonacci retracement, which will converge with this crab pattern, the gray one, with this bearish crab pattern projected just a few points above. That's the golden Fibonacci extension. So basically, we have this major eventual bearish cipher pattern at 78% Fib. So the market has achieved the 127% Fibonacci extension right there, just nailed the 127 extension. So basically, we see this as a major first swing low, a retracement, and then 127% Fibonacci extension achieved. And then if the market approaches the 78% Fib, that will complete the sequence, and we expect different intervenience to start to take over command of the market at that point. So if that happens, we may see a retracement and eventually a deeper one from those price levels. We never know if that will happen, but that's not impossible. So let's stay focused on this price zone. If that happens, if the market decides to respect this most recent fractal support over there, or the eventual formation of the right shoulder, a bounce, and a violation above this structure, confirming the pattern, which may offer a nice opportunity to get involved, at least until the market achieves this price zone. We should pay attention as soon as the price, for those who will engage the market above this structure, should pay attention to this price zone, or this cluster zone here between the golden Fibonacci extension and the 78% Fib. If you want to extend that range a little bit, you can always use also the 88% Fibonacci retracement level. I'm trying to pick that Fib here, not this one. I need to delete this. Okay, you can extend that range, or that, let's call it a cluster box, between the 88% Fib and the 78% Fibonacci retracement level, and there in the middle, or close to the 78, we have the golden Fibonacci extension level. So basically, as I said, or one right shoulder. And of course, when I say a right shoulder, nothing assures me the market will ignore completely that idea and sinks below or retest of the previous lows. It's also one of the possibilities. As soon as the price approaches this price zone, the market can actually sink even deeper. But when we search, when we search for specific criteria, we start to project those events, and if the market decides to correspond our expectations, we can start to take some actions. But let's see what will happen here. Now we have also the Canadian dollar. I shared also this pattern before, the bearish shark pattern at 168 extension, 133.69. So basically what we see here is a potential inverted, not inverted, but one heads and shoulders with default targets at 132.35. So basically this is a 50% Fibonacci retracement and a few points below the 200 moving average as a default projection for that minor event on a 2 hours time frame chart, as we can see. So I will not be surprised to see, actually we are trading very close to these blue crab pattern default targets, the 38% fib, and then we have the 50% for the shark pattern just a few points below. So I will not be, as always, I will not be surprised with anything, and specifically when the price approaches the default targets for those patterns, even less. Norwegian krone, as I said, now we are heading, I believe, to the default targets for the pattern. The Mexican peso has found some pressure at the monthly fractal support, and basically the market has failed just a few points. I was projecting this pattern before, and I was saying, okay, we have the 38% Fibonacci retracement right there, the major fib. So this is a major Fibonacci retracement from this weekly fractal resistance to the weekly fractal support below, actually to the most recent lows. 38% Fibonacci retracement. The price has rejected the idea to at least to nail that fib. Actually, I used to see usually the market will find that resistance, that retracement level. So, but it has failed just by a few points. 224% Fibonacci level also missed just by 1 or 2 points. But keep this idea. We are now seeing this price behavior representing kind of a bearish shark pattern, and we are already trading the 38% Fibonacci retracement from these highs, I believe. Actually, we are trading between the default target, the 50% fib. We are also approaching the 200 moving average on this specific time frame. So basically, the market has found some pressure already between those 38, and 50% Fibonacci retracement level. Okay, more. Dollar versus yen. I said yesterday eventual cup and handle, and that we shouldn't get surprised with a bounce from this 200% Fibonacci extension. This is the default target for the heads and shoulders printed above, and well, the market ends up creating this nice bounce from that Fibonacci level and from the previous weekly support. Let's say we are forming the handle. Let's see if the market then, let's see how long the market will, how much time the market will need to form that handle, which type of structure the price will print here, and we can eventually try to search for an opportunity to sell if the market breaks below that weekly fractal support. Euro versus the yen, we are approaching, actually we're not approaching, a nice bounce from the yen. Nice bounce from the yen. I shared this yesterday with some of you, or at least with those who were here. We checked that video. 121.79. This is the bullish shark pattern. Also, actually, I'm sorry, the bullish crab pattern. This blue, or this, let's call it the blue shark there. It requires, or it implies, or it suggests a bounce from this price zone and the 38% Fibonacci retracement as a retest of the monthly fractal resistance. So I will not be surprised to see that happening, and actually the market reacting very well from that price zone. The pound versus the yen, nothing formed for now. We eventual third drive here, one first low, a second one, and a third one. We are now adding the default target for that price behavior. So the default expectation after that third drive It's nothing more than a retest of this previous structure highs, the first high after the first low. So we have a first low, and how can I draw this for you? We have this first low. I believe you get the point already, but for those who don't, one first low, and then the second and the third one. The third one should be followed by a retest of this previous structure highs. This is what we call the third drives or a three drives pattern. So basically I will not be surprised to see that pattern acting as a trigger for even more upside momentum for the pair, but nothing very specific at this point. I was expecting one approach to this to the weekly fractal, very similar to the euro versus the yen, with this bullish bat pattern on hold at the 88% Fibonacci retracement level, and that potential this potential inverted cup and handle. Let's see how the market will react there. Then we have Australian dollar versus the yen, also very similar, and as you can see, previously the market has failed just by a few points, this bullish crab pattern, and the same happened today when the market decides to bounce before completing this bullish sharp pattern. So this was the example that I was using yesterday, kind of a 1-2 risk reward approach for that specific trade, and very similar to the Australian. We have also kind of the Australian dollar and the Australian versus the New Zealand. We have kind of a double bottom there, with the market confirming that pattern already and already threatening the previous structure high. So the solutions here very simple. So we have this double bottom confirmed. We can wait for the golden Fibonacci retracement that will form the bullish 2618. So a double bottom confirmed with a violation of the neck, with a retracement back to the golden Fibonacci level. So that sequence completes a 2618 trade setup. We expect nothing more than a potential symmetrical projection above, so kind of an ABCD pattern. So that's what type of a projection that we expect for the 2618. The formation of kind of a symmetry projected above. If that happens, that may offer an opportunity to go long. We already know if the market decides to break below, it makes no sense anymore to remain there, so we need to exit that trade if the market decides to break below, but it can offer a nice opportunity to go long with the Australian dollar versus the yen, since it has failed the default, let's call it the extended, the 224% Fibonacci extension, the bullish shark pattern. So that being said, nothing assures, attention with this, nothing assures the market will not complete the pattern, will ignore the golden Fibonacci level and then completing the pattern just a few points below the double bottom. But we understand and we need to face this as a potential reversal behavior. So that being said, we expect more upside momentum. Any retracement should be bought at this point because the pattern has already been confirmed as a potential reversal behavior. So that being said, from now on, I will search for a potential buy opportunity. If the market decides to sink into those levels, I will search for that sequence, and it can fail, obviously. New Zealand versus the yen. Actually, I projected a huge fall, which means nothing until the market proves that the projection was right. I can project patterns more 500 points below if I need or if I want, but it makes no sense because the pattern is not formed. So I was expecting the violation of this fractal support, the daily fractal support at that time, and as I said, if the market decides to trade below that weekly fractal, I will not be surprised to see the price approaching these lows. and also this as a potential third drive. Nice reaction there also, very similar to the example that I showed you before, and now threatening not only the recovery above this previous trendline support, but also the 200 moving average also approaching from above, which may put some pressure there. CAD versus the yen. Nice range between the 88% Fib and the 113% Fibonacci retracement level. I started to project this as a potential bat pattern at 88% Fib. The market has traded below, actually violating below this, trading below this weekly fractal support, and then it has found some pressure at the 113% Fib. As I said yesterday, this is also the alt bat pattern completion point. We should always pay attention to those. To that specific range. When we trade the bat pattern, we have this range. In this case, this is a 1 hour time frame chart. In this case, it may not represent a lot. It's 55 points. It's something already, but well, we should pay attention to those ratios. A fall should guide us into more, actually, if the market fails to find support between those ranges, between that 88 and 113% Fibonacci extension level, we may see more downside momentum. We may see the price sinking into those Fibonacci, golden Fibonacci extension levels, 76.99. So for now, we have also this kind of a double top, or a double bottom, kind of. Let's see how this will develop. I'm seeing also the potential heads and shoulders here, the inverted heads and shoulders. Eventually a breakout above these highs will put the price trading even higher. A simple way to project that is a simple box clone, which will give you a price 79.19, so that will put the price trading very close to that 200 moving average on a 1 hour time frame chart, obviously, which is now pointing to 79.34. So I will not be surprised with that. That will represent also a retracement to the 50% Fibonacci level. So basically the alt bat pattern supported by one inverted heads and shoulders, now eventually threatening the trigger point or the validation point, and if that confirms, we may see the price searching for this 200 moving average, 50% Fib, 79.19 default projection for Canadian versus the yen. Euro versus the New Zealand, rejecting this trend line again, approaching this previous and most recent fractal support. I projected this eventual major shark pattern at 168 extension yesterday, so this is a major sequence. If that happens, it may offer some pressure. 173.13 if that happens. So for now, we're still rejecting this trend line, ascending trend line support after a threat, after almost recovering the structure again, after trying to recover above this structure again, failed, and we are now approaching, actually we are now approaching exactly the most recent fractal support. So a violation of this structure may put the price trading even lower. Let's see how it will develop from here. Euro versus the Australian dollar. What we have here, projected yesterday, that eventual cipher pattern. The market decides to reject the previous, actually after trading above the previous structure highs, the market has formed this kind of a double top there, and then it starts to sink. I was expecting a push to the 78% Fibonacci and then a retracement, but the price has decided to reject that idea. Let's try to see and to update those fractals here. This is the weekly fractal. We have the golden Fibonacci there. Let's check if the market, no, golden Fibonacci was supporting this. Actually, between the golden Fib and the 78% Fibonacci, we have this support, 127% Fibonacci, a bounce and a rejection to trade higher. So let's see how it will develop from here. It can also print kind of an head and shoulders, an inverted head and shoulders, but kind of an orthodox one. Not so usual to see this kind of reaction. The idea is to see then later the price violating or breaking above this resistance. If that happens, we may see the price. We may see this as a potential inverted head and shoulders with the left shoulder right there. Okay, something like this. It can happen. It will not be the last time for sure the market will behave like that. Let's wait and see. As I said yesterday, I don't want to look to euro versus the cable until the market approaches this price zone. At least I need to see one approach to 89.19, and once the price approaches that level, I will start to think on what to do with that. For now, I have only those projections below, but I had already projected a few patterns in the middle of this huge process here, and well, nothing works inside that range, and I prefer to wait patiently for a clear decision above or below that strange structure for euro versus the cable, or euro versus the pound. Now, as I showed you yesterday, projected at 181.59. I'm sorry. So that was the bullish sharp pattern projected at the trendline support. So I was expecting some pressure there. The market has decided to form this sideways project there, and as soon as the market trades above, as you can see, the market decided to approach the previous structure highs with a new fractal resistance there. We have already, this was the daily fractal, and the daily fractal support is also here, and the most recent fractal there, and in fact exactly that fractal still positioned there. What we can project from here, inside this range we have already some criterias, and we can say if something happens, we can identify some patterns above or in let's say between this range, between the daily resistance and the daily support, and that we don't know how much time the price will stay inside this range, but we can start to identify potential patterns inside that range. So basically the first one that occurs to me at this point, and based on the price structure and the Fibonacci ratios at our disposal at this point, I will not be surprised to see one approach to these previous lows, so-called M-shape behavior, and the bat pattern, another one projected. I projected that pattern at the trendline support. It doesn't mean the price will form that pattern at that trend line. It can form above or below. It will depend when the price will approach that Fibonacci level. But this is a default BAT pattern at 88% Fib. Usually I can use also the default criteria to search for the alt BAT pattern at 113% Fibonacci extension, which implies a violation of the starting point of the pattern, the daily fractal in this case. And if that fails, if this range fails as a support for upside momentum, then we will see the crab pattern extended at 168 extension. That will put the price trading very close to that previous projected bullish shark pattern completion point, and will also put the price trading this. Let me try to nail this one. Retracement level very close to the 50% Fibonacci level. So initially we can wait for initial pressure at 88% Fib. Let's assume the market will keep above, or will stay above this trend line support, and as soon as we see the market violating that trend line support, we will see that we may see it as a false breakout or outside return if you want to respect that Fibonacci 113% Fibonacci level. So and it will happen sometimes, an outside return with the market forcing new lows and then a fast recover of the structure and the previous structure lows. Okay, when ascending structure recovered later, okay, and outside return inside the structure. That can also, it's also one of the possibilities. Okay, but well, let's keep observing at this point. And obviously, as I said, if that fails, we may see this BAT pattern or alt BAT pattern turned into a crab extended at the 168 extension right there. So let's see how it will develop from here. More higher time frame. I need to keep this chart on a higher time frame. We are in this range between let's say between the weekly fractal and the weekly fractal resistance. So between those weekly fractals, on a 4 hours time frame, I said yesterday I will not be surprised with a retest of this daily and weekly fractal resistance, well supported by the 200 moving average. Let's see if the price holds above that 200 moving average. We're still threatening the violation of that moving average. Let's see if that will remain above it. If that is the case, we may see the price trading above. In this situation, and based on what we have at our disposal, actually, since yesterday, we have already a few criteria here. Eventual BAT pattern above, 88% Fibonacci, and again I can use the default projections for the BAT, the alt BAT pattern, the 113% Fibonacci extension, and if those levels fail as resistance in this case, we may see that BAT pattern or alt BAT pattern extended to the 168 extension, and basically that will put the price trading this major 88% Fibonacci retracement and major bearish BAT pattern completion point. Okay, and the same exercise I'm doing this here for the bearish crab pattern, I can do the same here for this major BAT pattern. If the market decides to fail to find a major resistance there, and because we are talking about the monthly fractal resistance, so if that happens, if the market decides to trade above it, we need to consider the 113% Fibonacci extension. And if that fails, now we will be talking about a huge extension above that monthly fractal, and that requires also a retracement later. So we will expect at some point the market needs to retrace, and if that happens, look where the price will retrace. Bearish crab pattern default target, monthly fractal resistance right there. That's the default target for the crab if formed, the 38% fib, and that will put the price retesting the monthly resistance for this pair, the pound, the GBP versus the New Zealand. Of course, again, pure nonsense, pure speculation. Wait for the pattern to form and react. Don't think, react. That's what I used to say. I don't think, I react as soon as the pattern forms. And obviously, if the pattern offers me a decent risk-reward situation. So that being said, for now, I don't care what the price will do at this point. We have also this shining structure, kind of, and we need to see something happen. I will not be surprised to see, as I said before yesterday, a retest of that weekly fractal, eventual cup and handle, eventually a retracement, well supported by that bearish bat pattern, eventually a retracement, the handle, and then more upside momentum. We never know what will happen, but let's stay focused on this possibility. And obviously, if the price decides to break the most recent supports or below the support levels, we may see these as a potential heads and shoulders, and we will talk later on. If that happens, we may see these as a potential right shoulder right there, and if the price decides to respect this price zone, we may see this pair sinking. Well, you can imagine the fall below the monthly fractal. If the price decides to violate this price zone, we have nothing more than 5% fall, 5.2% fall projected below the monthly fractal if that happens. But again, it's too soon to say, okay, it will fall, because we need confirmation. And even if the price decides to trade below that monthly fractal, I'm sorry, we have also we have also this bullish shark pattern projected below, which may offer limited pressure, even though, but ultimately the price may find later more downside momentum and those default targets below. Now let's talk about the Dixie. We are almost finishing here, and let's go into a 2 hours time frame chart. So I projected that as a again, bat pattern and alt bat pattern above. So I projected initially, of course, as a bat pattern, because I was expecting, and we can create that expectation. So there is a bat pattern, and the final objective is to remain below this daily fractal resistance. And if the market decides to break this price zone, we have, as always, the 113% Fibonacci extension above as a potential pressure level. Let's hunt those stops positioned right above the starting point of the pattern, in this case above the fractal. Let's hunt those stops, and then let's sync with the market. The market has not synced yet. I'm not saying the market will achieve those default targets for the Dixie, but I will not be surprised with that 38% Fibonacci retracement at 93.48. So that's what we expect from a fall from the 113% Fibonacci extension. If this fails, again, we may see later the price targeting the golden Fibonacci extension above. And again, look at this example where the market will find their targets later. If that happens, default targets for the crab pattern projected at the most recent daily fractal resistance. We have already a fractal resistance above, and we have our most recent fractal support actually adjusted here. Okay. Exactly. So at this point, and let's adjust this again, at this point I will expect, and because the market is reacting from the from the 113% Fibonacci extension, I will expect a reaction from that price zone and the default target for that pattern projected below. Okay, eventually also searching for the 200 moving average approaching from below. Gold, nice, recovered from the most recent lows, 1860, and we are now approaching this previous structure support level. There's more potential for more downside momentum for the gold, for the pressure, and actually for the metals in general. For now, I will not cover gold, and I will just keep sharing these weekly. I will keep sharing this weekly chart with you, and these the same thought, the same idea, the same exercise, an extension to the 113% Fib, and a retracement to the 38% Fibonacci from the previous structure highs. So basically, ultimately, we will see gold trading 1685. After this huge run, we have the possibility for a fall towards the 38% Fibonacci retracement level, and we are talking obviously about the alt-bat pattern default target, 113% Fib and the fall. Okay, let's see how it will react. Very similar with silver. Let me try to get a clear picture here. Let me delete all those arrows that I have here, and let me delete this. Okay, bearish shark pattern, 224, almost nailed. Monthly fractal just a few points above, 38% Fibonacci already achieved. Default target for the pattern at 2075. Previous structure highs, 50% Fibonacci retracement, default target for the pattern, so I will not be surprised to see sooner or later silver and gold trading lower, and then we will search for more bullish opportunities. Oil, 32%, exactly 32%, 38%, I'm sorry, 38% Fibonacci retracement, projected at 3115. Golden Fibonacci as a pressure element above. Let's see, 3115 for crude oil. SPX, 78% Fibonacci retracement, nice pressure there. Let's see if the price will stay above the weekly fractal support or not. We don't have a pattern here. Let's see how it will develop also. The DAX, we are now trading a bullish crab pattern completion point. Golden Fibonacci extension level 1143, 38% Fibonacci, default target for this bearish bat pattern printed above. Huge long period of time before a fall, head and shoulders, default target for the bat pattern achieved 168 extension from this very last swing high, the head formation. Actually, the formation of this, of the head for the heads and shoulders. So an extension of this swing projected below bullish crab pattern completion point. I will not be surprised with the DAX trading back to the 38% fib or very close to the weekly fractal support, and eventually that is the objective, to retest the previous structural lows. But we have also the starting point of this major crab pattern. This is, by the way, this is a deep crab pattern because the market actually approaches the 88% Fibonacci. Actually, the market touches the 88% Fibonacci retracement here, a retracement from all that swing, 88% fib, then a bounce, retest of the highs, heads and shoulders, or actually the right shoulder, and then the validation of the inverted edge, the heads and shoulders, and then extension to the golden Fibonacci level. So basically we are now facing the bullish deep crab pattern, and we can expect a bounce from this price zone. If that will happen, I don't know, I don't care. I know where the pattern invalidates. I know the pattern will offer me from my starting point. I know the pattern will offer me something like 6% in range. I know that I can use kind of a 2.5, 3% maximum as a 1-2 risk reward approach. If that fails, so on, move forward and well, search for the next one. It has failed above the weekly fractal support. Actually, it has failed just a few points below the weekly fractal support. We had a butterfly pattern projected right there, right below. It has failed almost immediately as soon as the price forms the pattern, a small bounce, and then starts to fall again. So it has failed before. I will not be surprised if that happens again. So, but that's what we have. We have a bullish crab pattern completion point, a 38% fib, nice risk reward approach. I believe it makes some, it can make some sense for some of you at least. And I will not cover the bond, neither the bonds, because I was expecting specific price action that never occurs, and neither Bitcoin, which is approaching the bearish crab pattern, also projected at 1410, and Ethereum, which has found very interesting resistance, also a minor bearish crab pattern. I saw that pattern being formed, but I was expecting some pressure as soon as the price starts to fall at these previous structure highs, but the market has decided to keep trading even lower. So basically I need to adjust these structures sooner or later. I will need to adjust these, but for now I have no interest on Ethereum, at least in terms of price structure, because I don't trade Bitcoins or cryptos. That being said, well, that's what we have for today. I hope you enjoyed this presentation or some of those updates, and of course, if you have any doubts or anything to clarify that you want to clarify, you have a lot of information about harmonics and about advanced pattern formations on the internet. We have massive information because you have a lot of people on YouTube also sharing some of their content, which is very interesting, because if the information is useful for someone, at least we have a lot of it at our disposal. So don't be shy. Try to search for, ask if you have questions, and if you have doubts. I will have I will have pleasure to answer you and to try to provide you with my experience, and which is not huge, but I believe it's enough for some of you at least to try to understand how the market behaves and to try to create something from this. So if you have any questions, please just shoot them, and I will have a moment to try to answer those. I believe I will not have time to answer all your questions, but at least the ones that I found more interesting and more useful for the community, I will try to provide you with my humble opinion regarding that subject, and hoping that may help other people as well, not only you. So it's a pleasure for me being here. I hope you enjoy, and all the best for you and your families. Have a nice weekend.